NFTs for me are technology. And the simplest way to put it, they are technology to digitally represent, secure, and do everything online for any unique asset type.
They may be a little out of fashion these days, but NFTs or non fungible tokens are way deeper technology than Bored Apes or CryptoPunks. Non fungible tokens or NFTs represent ownership of an asset on chain. And this asset could be a digital asset or a physical real world asset as well. Unique network is an OG network, a parachain that was built on Polkadot network for minting, storing, managing NFTs, and a lot beyond. And today on Alpha Unhashed, we're going to be diving deep into the technology of NFTs with Alexander Mitrovich, the founder of Unique Network. Welcome to Alpha Unhashed. I'm Sri Mishra, your host. Alex, welcome to Alpha Unhashed.
Thank you. Nice to be here.
Alex, I'll dive straight in. What is your big picture vision for NFTs?
Oh, okay. I've been talking about it, thinking about it for the last 5, 6 years. So, first, I want to say what NFTs are not. They're not JPEGs that you collect, buy, sell, make money on. They are NFTs for me are technology. And the simplest way to put it, they are a technology to digitally represent, secure, and do everything online for any unique asset type. Okay, so we have fungible tokens, we have cryptocurrencies that represent fungible things, money, mostly other things as well, but whenever you have something that is same thing, just depending on quantity, you have fungible tokens. But NFTs are to represent your tree, your clothing, your passport, your I don't know, high school diploma or university diploma or PhD or your car, that kind of thing. So as a technology, they are very fundamental technology. They are something that will slowly, step by step, come in and just like it has covered very strongly the representation of collectibles, whether digital or even real ones, they will slowly start to conquer the rest of the unique world. And they are perfectly, they are the best technology that humanity has today for digitally managing, doing whatever you want with the unique asset types.
Okay, so I hear you touch upon sort of a couple of things there. So one is obviously the uniqueness of NFT as a non fungible token, which we all understand in the crypto space, and
Mhm.
how they connect to, for example, identity or ownership. Identity and ownership can pretty much define how NFTs can relate to most of anything else that we do in life, at work. And what's how do you think about this identity and ownership, especially on a on chain in the form of a unique NFT, in sort of transpiring, moving over the next decade?
Okay, so first, there's two questions here. So, how does NFT represent all those unique things? And second is, how does it evolve? So, technology piece is there. It doesn't need much more technology to represent anything. Okay. What is needed is either a social contract around it or a real contract and legal work or a combination of the both. But it needs humans to say, this is, you know, this is your house, this is your car, this is your passport, this is your identity online, and so on. And a little by little, that is already happening. There's a lot of games where your NFT avatar is your identity. But for everything else to happen, you need social acceptance of that. But most importantly, you need businesses, governments, people to start putting in the real value into that. Okay, that will take time. A lot of people have asked me one of the kind of the biggest potentially use cases for NFTs probably lie in real estate industry, representing real estate assets. But I tell to everybody for a number of years now that that is something that you're going to wait for the longest. Okay, because of the second component. Yeah, the connection for me, it's obvious. For a lot of people who are into the Web3 space, it is also kind of very clear to understand that you can take and real estate ledger of a town, state, country, whatever. You can put it on blockchain and you can use NFTs to represent each individual piece of real estate. Okay, and with the advanced NFT technology we have today, you can actually do the real stuff that you have in the real world. You can split up the land into two pieces. You can add stuff to it, etc. So, but the human construct around the real estate industry is very conservative and has very entrenched interests. So, I think that that will be one of the last use cases that we will see in actual usage. People will play with it. People will do R&D. People will tokenize individual properties and maybe even bigger things. But the overall uh, real acceptance will come latest because, again, you have all these social constructs that are not in favor of a new technology, of a disruptive technology. They want to keep things as they are and keep making money. So now, but what it can do, what it can represent, and I hope we can talk about it more on the show today, is the AI stuff. Okay, AI agents, identifying them, identify who's made them, how they're made them, and so on. And again, we can dive into many potential AI use cases where NFTs can play a role. So I think that is actually the most promising area of using NFTs in a very advanced and real way right now. The How does it evolve over a decade or more? Uh, Again, the technology is here, and you can do with NFTs very powerful stuff, and you can do it very easily. Whether it's real world asset representations like bonds, stocks, and stuff like people are doing already today, and are trading hundreds of millions of dollars worth of them, which does bring certain benefits to those who know. Uh, it is it's the That is something that people will play with more and more. And as we start having business interests, economic interests in doing certain things, uh, take whatever industry you want, gaming, for example, or again, finance. And people already started discovering NFTs as such. And you will have, just like in any disruptive technology, you will have the NFTs as a kind of very small, very, very small component of the new businesses coming up, but enabling them more and more. Just like disruption, in disruption, you have a stone where the new things, they fill it in the like water space between the cracks in it. It will slowly start doing that, and then from the inside, at some point, you're going to have inflection point where it's going to really go big. But again, I think that the first use case we've seen with NFTs, and namely collectibles, is actually opposite of what NFTs really are. They are a very deep level technology, like HTTPS or something, where actually the technology itself is going to play a very small part in every new um, area use case it covers, and it will have, but it will enable new business models and new businesses and startups, et cetera, where people might not necessarily even talk about the NFTs as a kind of the keystone here. What's the real advantages will lie in the real business, enabling people to trade bonds 24 by 7 and not rely on centralized ledgers for it, if governments permit that, for example, and things like that. They will not talk about NFTs. NFTs will be just a small part of it, but they will drive the traffic, they will drive transactions, and they will enable very valuable businesses. So over the 10 years, you're going to start seeing there are a number of areas where NFTs are already playing. There's a lot of people concentrating the R&D on, and pilot projects, small projects, startups, and so on, and namely real world assets stuff, whether it's finance or wine or whatever those things, the gaming and AI. I think that those three areas are kind of where people are playing until it becomes big enough that it's no longer a play, but is it becomes serious business.
Mhm. Okay. We'll get into the AI, and especially AI in the context of on-chain activity, and AI agents and NFTs. Before that, when we talk about RWAs, and RWAs have been tokenized, and I mean, there are multiple advantages for tokenizing even TradFi assets, including fractionalization, liquidity, ease of access, ownership. So all of that stuff is there. Now, RWAs, let's take financial assets as RWAs. What is the difference between tokenizing them as ERC20 standard tokens, which are fungible tokens, versus NFTs?
Serial number. So for a bond, you have to have a serial number on it. You have to actually, when you trade it, you have to transfer a very specific bond. Same for stocks, actually. So it's as simple as that. They cannot be fungible tokens. They cannot be ERC20s.
Right. And what would and is there a way of fractionalizing NFTs? I know sometime in
Of course,
your
of
evolution,
course.
you guys fractionalized the ownership of Punk, CryptoPunk. So how would that be different from again an ERC20 standard token, and why? If you can just explain that.
Well, the difference is that when you fractionalize an NFT, and yes, of course, you can do that, and you can do that very easily, very quickly. It costs you kind of very little money to do that. So the technology is not a problem here. The problem is people wrapping their heads and kind of taking advantage of using it in a real world. That's the thing. But the difference here is that when you fractionalize the NFT, you can fractionalize it actually into two things. One is you can fractionalize it into fungible tokens, which is what you're referring to. But you can also fractionalize them into a lot of NFTs, and you nest them between. There's, that's a kind of advanced use case. Maybe we kind of dive into that in some later time or next show and so on. But
Let's
the
dive into that now. Let's dive into that now.
the owner of that is not a smart contract that made it's fungible token. It's the NFT is the ultimate kind of owner of it. So you have a connection. You cannot kind of take it out of there. So it's the unique thing that you give parts of. Uh, yeah, you can say here's a smart contract, and that smart contract holds in its custody a bond, for example. But you cannot really say which bond it is, and you cannot say that on chain. With NFTs, you put in all the metadata you want
Mm,
in that NFT, and we are past the times of EVM where metadata is off chain. It's on chain, and you put in everything there. You put in the serial number. You put in the owner's data or whatever you want, and it gets you there. And then when you trade when you fractionalize it for whatever purpose, usually for trading smaller kind of numbers, the you cannot kind of take that out. You're always trading that particular bond
mm,
components. You're not trading anything else. Yeah, you can create different types of trading platforms where when you can say this bond is uh, it belongs to this entity and it's equal to this other bond. But here we're getting into nested NFT scenarios where you have an NFT of the issuer of the bond. I don't know, Goldman Sachs or Boeing or whoever, and and then their bond issuance is a collection, and then they issue, I don't know, 1,000 bonds of $1 million each or whatever, and then you fractionalize each one of those. And actually, you can do that with NFT technology today because there is kind of very powerful nesting capability that you can use. And it's not harder than minting 10,000 CryptoPunks. It's the same thing. It's technically, again, it's no longer a problem at all. It's an enabler. It's the businesses who should be interested in this that are kind of the driving force for adoption, future, and so on. And again, as always in history, technology finds its way like water inside the stone. It'll just take time. How much time? No one can tell you. No one.
mhm. Right. No, you're very right on that, and sometimes it takes a long time to reach a certain point, and then things just start happening very fast. It's probably
It's always like that.
the yeah, and probably the whole of digital assets and its various formats, especially NFTs, is going to be something like that. Now again, to kind of dig into this further, Alex. So here's a unique asset, be it a bond with a serial number, or let's say in a more evolved state, a real estate, which is a more difficult one. And these are all their real assets. Now we've got an to create an on-chain representation of that via NFTs. So what has to happen in between? How does that work?
Haha. Lots of lawyers need to happen in between. Okay. And lots of lawyers and property developers that are interested in that need that for some reason or another. Maybe I don't know. Maybe Trump kind of gets us to talk about that seriously, but You need a lot
And
of.
not just
Mhm.
for I mean, I just throw in the real estate piece, but not just talking about real estate as such. So any kind of RWA off chain, and of course the legal framework, the social legal contract is the most important one, as we got started with. But so generally, for everyone to understand what has to happen in between.
Well, again, each of those use cases, the answer to that question is different because what needs to happen is a human interest in those things, the business economical interest in doing it that way. The technical solutions to build whatever you want are cheap and fast already, and they are not a deal breaker at all.
Hmm.
The most important thing that needs to happen is you need to have economic interests aligned. Just like in gaming, for example, things are starting to cook. If you haven't noticed, okay, gaming has been a thing for for of interest for blockchain people ever since the beginning, and
Hmm.
we've had ups and downs, but mostly downs, mostly disappointments, mostly problems, issues, and very short periods of excitement about something. But in the last bull cycle, 3, 4 years ago, 4, 5 years ago, the excitement around X Infinity, around NBA Top Shots, and all of those things, those were real. Okay, one was, they have different legs, they have different long term appeal, either very short or a little bit longer, and but less ambitious and so on. But still, you've had some successes in gaming. What's happening today is that people have figured out that actually it's not the NFTs that um, they can be a top shots. Very, very good idea and pretty well implemented, except for one economic fact that the size of the that business should not be billions and billions of dollars. Okay, the NBA
Hmm.
franchise is valuable, but trading online cards, having online cards for all the videos, those should be very small and kind of not too valuable, except with the exception of very few things. So the overall market size of that business is not in the billions and billions of dollars. It should be in the millions, maybe tens or even hundreds of millions of dollars, but not more. Okay. And at some point, and when it started, it looked like it's tens of billions of dollars, for Christ's sake. So if things continue that way, but there's simply not enough demand for it. So um, take that, and a lot of companies have paid attention and figured out what Mythical, for example, one of probably top kind of gaming uh, chains, ecosystems, organizations, they were very successful in doing several things. First is creating really good games with phenomenal IP. Okay, they represent FIFA. They represent, they're doing stuff with Budget Penguins and so on. The top IP, and they made some good games people want to play. And the crypto component of it is fairly hidden. It is available for those that really care about it and that want to do something about it. But that's not the point of the value chain, of the value creation. The value creation is just like everything else, only it's enabled by blockchain, so it's next generation. So Mythos can kind of create their own chain, can have their own token, can satisfy the need of those all behind. So that formula is actually really working, and it will continue to work. I don't think, this is not something that will be around for one bull run and that's it. This will have staying power, and much better than the previous generations of the bigger kind of gaming uh, projects. So people are learning, and you're going to have that more and more. People are starting to kind of admit that you have to have a real utility, that you have to have a connection to the real world and bring in real value. And once people start doing that enough, actually the value will be there. So the value creation will be there and will be there for the long term. So I'm very bullish on the gaming industry getting it act together and actually in this year or two we'll start creating dozens of good players that will be a base of what will become Web3 gaming as a very large industry. It's never going to take over the whole world of gaming, but it will be just like mobile gaming is, or these game. Gaming has its niches, is different places, and this will become a big enough kind of portion of that. So that's the way I see it.
Okay.
So what needs to happen is people, bottom line, to answer your question at the end of long conversation, people need to figure out how to really create value using this stuff. And then things will start happening really. As simple as that.
So you don't think that in between bridge between off to on chain is, leave aside the more complex stuff like real estate and stuff, but in other use cases, the legal framework is not a hindrance as it stands now currently. Even now a lot can happen as long as the application, like for example you spoke about NBA top shots collectibles for example, but as long as they are structured properly, the legal framework does not currently have any impediments in bridging that.
Not legal framework necessarily, although there is always legal framework that's necessary for those things. We've had a lot of discussions in the industry. How much are NFTs yours in really? And what is the real legal kind of standing of it, and so on. There is always some legal stuff underneath, but it's small and it's not a problem in a lot of use cases. It's easier in some to cover than in others. So for financial industry, heavily regulated, of course you're going to have to spend tens or hundreds of millions of dollars on lawyers just to cover that stuff. And that's why very few people are doing it, because you can't justify that. But in I don't know, doing the fan management systems and so on, that's not too hard.
Okay. And and you spoke about web3 gaming, quite clearly an area where NFTs have or are finding their product market fit in a strong, robust fashion. And what are the specifics that is driving this product market fit for NFTs in Web3 gaming? Is it identities, avatars? Is it in-game rewards, being having digital value directly? What is, if you kind of scratch that layer, what is it that has made NFTs find that product market fit in Web3 gaming?
One important thing: admitting that you cannot make an NFT and suddenly you demand big money for it. That's not the use case. The use case is when you take millions of in-game items and assign them value of a cent each. If you can do
Hmm.
that, then if you become modest and not go for the riches, but rather kind of figure out a way how to create value for millions of people, uh, then you're going to find the product. Then you have a chance of finding the product market fit. If you insist on making the NFTs something that is really valuable, and everything above $10 is going to have a very niche market. So it's not going to find the big product market fit. You're going to have the, still online, digital art, and there's still going to be a market in it. It's only not going to be too big. Not everybody on the planet wants to trade digital art. They don't care about it that much. They've burned themselves too much in the previous bull cycle. Um, so you just need to kind of really understand where the value creation is. Make sure you're not pumping things because you want them to be, those things just because they're NFTs, and you kind of figured out you can make them NFTs, that suddenly they're worth more than if they're just an in-game item in a centralized game. Okay. If you do that, then you start integrating them very carefully with step by step as rewards, as you say. Then those rewards, you can set up the market where they can be exchanged for the in-game items that are doing actual things, that are valuable for players, that they can buy with real money. So it starts replacing that part of the economy slowly, a little by little. And if you have games that are on scale, then that becomes valuable. So you start changing the model of ownership of game. How do you get this stuff and how do you own it? And with that, you slowly start creating an ecosystem that's different. That's Web3.
Okay. Okay. I mean, one is clearly around the value and how they have been used, and how their use case has kind of grown in the whole gaming space. Now, we were to go take a step back, and some of the original applications for NFTs in the area of, say, digital rights asset management in music, or stuff like ticketing. What happened to all that? Where do you think the gap in the PMF lies, or is it just a question of time?
It's a question of time. NFTs will be used in all of those in like 10, 20 years. I guarantee you that. How soon? That's a question I can't answer. I don't think anybody can answer, but objectively. Of course, I can answer it opinion, give you opinion, but as they teach in good business schools, the opinions do not matter. They're false. So the music is actually my pretty favorite one because, first of all, there in the music industry there is a big need for disruptive new kind of ways to create value and do stuff. Uh, and because of that, because music industry has been shrinking for the last 30 years or something. I don't know. It started a little bit kind of getting up, but still, it's far from what it was. And musicians need to eat. So I think that you will see certainly valuable kind of solutions in the music industry in the next 5 years. Okay, it's already happening at the level of building pilots, R&D, trying out things, all of that in a lot of different areas. Whether it's recording music as an NFT and then kind of listening, making players that can play only your NFT or whatever, things like that, or things like where you create a theme or something. Different instruments are different. Just one instrument NFT for a melody, and then you can combine them and play. Create your own melodies out of that, and so on. There's a lot of interesting experiments happening with that. Again, they're all experiments. They're all R&D stuff. Uh, but I think that the real value for the music industry is around creating the loyalty systems, the fan management
Hmm.
systems, because I've seen it. We made a few ourselves. The software to make that stuff is cheap to make. It's not, you don't need millions of dollars to create a very good fan management system to for a particular band, and then that can give to the artist something they haven't had before, and that is a personal relationship with each fan. Okay, they can create a CRM out of it. They can understand who they are. They can reward them in an appropriate way, and so on. The technology of NFT here is giving something that Web2 could not give. For me, looking at how those things work in the real world is akin to, if you remember, when Facebook came out and people started joining the groups as a kind of revelation, as finally I found like-minded people. It was very honest, very kind of, people were happy to do that. The NFTs can give something like that today to musicians and their fans. It applies to all the celebrity types. It can be, YouTubers, bloggers, or actors, or whoever the celebrities. Those kinds of solutions. There are already a number of them, and you will see a big push of that um, over the next year, two, five. It's something that will grow very strongly. I'm certain of it. Of fairly soon, because it creates a lot of value.
Okay, all right. I think obviously one of the and a lot of this is sort of also driven by what finds user level application, um, kind of similarly has corollaries in how other associated technologies kind of grow with that. We've seen that in AI since the last few years, when AI really became B2C, in some sense, where with the evolution of generative AI, LLMs, the likes of Chat GPTs, and then many more that came forward. Now, similarly, the as AI agents have become a buzzword on crypto, especially in the context of having AI agents which can manage portfolios, which can undertake transactions directly, having ownership of a crypto wallet. This is how this whole ecosystem. There's a lot of narrative buzz around it at Arna. In fact, uh, we're an autonomous alpha discovery protocol which brings AI and tokenization together. So, having worked on that for the last 3 years, and now suddenly I see there's the whole bunch of AI agent uh, buzz, but really, in terms of its real on-chain application, it has to be seen how exactly agents will pan out. Now, how, and you touched upon the application of NFTs in the case of AI agents to maybe establish credibility, maybe sort of establish true identity. How can you delve into that? How will NFTs and AI agents on chain come together?
Sure. There are literally hundreds, if not thousands or millions, of different kind of ways those two can interact and kind of add value together. And to kind of simplify that and to structure it for a normal person to kind of pay any attention to it, I've kind of divided the potential into three groups. One is, okay, so things that are easiest for everybody to comprehend, you take and make whatever AI produces as an NFT. Okay, whether it's art, whether it's opinions, tweets, whether it's a trade, whether it's whatever, the outputs of the, you know, either LLM or a specifically trained AI, and you certify that with the NFT. For the purposes of AI stuff, I refer to NFTs as certificates of everything. Okay, because that's the most kind of closest to the real world application of it. You certify the output. You say, this AI has created all, this article or this image or both. in Spain, they just kind of brought in a law that says, unless you really say, unless you say everywhere that this whatever you're making is AI made, we're going to kind of, we're going to put you in jail or we're going to fine you a lot, and so on. Those laws are coming about, and
Mm-hmm.
and very soon, those creators of AI content, they will need a technology to certify that everywhere. Okay, in a lot of different places, because they can say, on their own Facebook page that this is AI generated somewhere, but then somebody else is going to forget to do that, and they're going to be sued for it and stuff like that. So you do need an automatic certification of outputs, and that's where NFTs fit in, because you certify the output right there as it's generated and so on. We're launching pretty soon the Solidity audit solution that's AI based on BitTensor, and that creates audit results as an NFT. You put it in
Mm-hmm.
there, and you know what you get. It's you don't need to dive into a long kind of control over how whether you turn it on, you turn it off. Everything is trustless. So
Mm-hmm.
you can certify the process itself, so you gain more truth and less trust of the system. If you entrust that to people to certify the output, then they can always, you need to really dive in and audit the process itself before you can decide to trust it. And with NFTs, you don't have to trust it. It's truth. It's written there, and all you need is understanding of blockchain and how it works, and what's in there. And that's a 5-minute kind of conversation for knowledgeable people. So that's one, certifying
Mm.
the outputs. Certifying inputs is another
Yeah.
area. It's actually very interesting for me. I'm very passionate about it. I don't think I will get to do something about it. It's a little bit far from my kind of areas of business kind of expertise and effect, but I would like to see that happening. So, in medicine, for example, or in law, okay, but medicine is my preferred one. You have AIs that are same as or much better than a radiologist today to read the CAT scans and such things. But the software, which AI is not certified doctor. So you cannot have that software solution be a radiologist in any country in the world. Okay, and India has, for example, acute need for, I don't know, I think the number was 200,000 radiologists that they lack. They could buy the equipment probably, but they cannot train enough people to do it, because simply the task is enormous. To train a radiologist, you need 10 years. So and 10 years of investments. Okay, so it's a lot of money here. So what people are doing, they're using the specialized projects, companies that are building AI stuff for radiology specifically. They're using it as a second opinion, and then they send it back to the real radiologist for check, and then they give it to the clients. Now, why is it that software cannot be a radiologist, at least to a certain extent? Whatever, because it's trained on who knows what. It's trained on Twitter, for Christ's sake. I think that I don't know, the moon, the Earth is flat or whatever. It's that. So if you can prove to the authorities, to the medical whatever board of any country, that you have trained the AI exclusively on the uh, textbooks that are approved by that, then you can have an AI doctor. At least you have a chance of it becoming one, good enough. So for that, you need certified data to come into it. You need to prove to the authorities that that is that you have given it only the approved textbooks and nothing else. You haven't, but gave them the textbooks that are coming up for approval. You gave them the university program that those people went through, and and you got a point, right? So the input data certification
Yeah.
will be
The
important.
authenticity origin of the data for any training data for AI
Yes.
is today it has always been a big important part of it. I mean, especially when you look at bias
I don't know
in
any other. Do you
within.
know any good way of doing it except with NFTs?
Uh, Well, on-chain validation of AI training data is obviously one of the core intersections of AI and blockchain that has been sort of spoken about for some time now. This and very clearly, yeah, NFTs are a great way of doing that. Yeah, it has to be on-chain, and in this particular case, the standard would be NFTs.
Definitely. So here, again, coming with the examples, that only thing is for that people don't think about NFTs that much because they think of EVM NFTs that are kind of stuck in the previous generation. What we have at Polkadot is NFTs. We can mint
Mm,
70,000 NFTs a minute. Okay.
mm,
So you can create at scale anything you want. And actually, if you need million per minute, we'll make that happen as well. It's going to cost you a little bit, somewhat more, but it's all manageable technology. The So its scale is there. It's just not at Ethereum chains,
mhm,
and it's the technology to metadata is the second thing. Metadata
mm,
needs to be on chain. So you don't go to some IPFS for data, you go on chain for metadata. And then
mm.
if you can create the powerful technologically solution that takes certifies,
At scale. Mm,
at scale on the input or on the output, then you
mm,
got a point, and that's what kind of interests me these days, and that's what we're working on
mhm.
these days, and
Okay,
it's
so
it's happening.
we said okay. So we said two things. What is the third? What is the third one?
Yeah, that's uh, a niche thing, which is if you really want to kind of dive in, you can certify the AI, the LLM or AI or algorithm itself, the training data, okay, and the training process. So, but I don't think there's
The
enough.
model. The model. Do you
Yeah,
want to talk about? I think the second part was the training data. So you're talking about a lot of applications in terms of
yeah, the training
the
process, the model. Yep.
okay. So essentially, several implications there in terms of validation of the authenticity of data, training data, the output in terms of certifying AI output and how it is used and the implications of that. So very interesting sort of areas as AI and tokenization come together. There will be all of these other implications, and NFTs are well poised in a way to address some of these requirements. How are you doing that at Unique Network? Tell us a little bit more about Unique Network. How and what's your focus? Where did you start, and where are you focusing on today? How do you see it moving from here?
Mhm. Okay, so we started with Unique. It was about, Jesus, it's more than 5 years ago now. We created the first NFT palette. It was a base of it. We launched in February 2020, so 5 years ago. Yeah, it was
Mm-hmm.
on Polkadot, and Polkadot is unfavored ecosystem these days, but it is actually extremely powerful as a technology. Extremely
Mm-hmm.
powerful, and it has a very strong staying power because of that, because it's damn good. So when we created first NFT palette, an NFT palette is a way to create and manage NFTs natively in Substrate, not using smart contract. That palette is the smart contract, and it lies in the blockchain itself.
Mm-hmm.
So we realized how powerful thing that can be. So here, 5 years later, we do have, we built a lot of things inside and around it for, for optimizing the chain itself, for creating good, useful tool sets around it, integrations and all of that stuff. So we have today a chain that can do, again, simplest way to say it is 70,000 NFTs per minute. Okay, that is in the Solana has been kind of hyped up and created as the fastest and cheapest, right? It can mint in reality, it can mint 1,500 NFTs per minute. That's it.
Mm-hmm.
It
Mm-hmm.
didn't go any faster than that. So did Polygon. I didn't, we didn't test too many of chains. There are some that are getting much faster, better, and so on. But this is for me a reflection of the power of the technology, the how well it's designed, and it's fairly reliable actually, the speed. But then you have the overall cost. You can optimize for that, and then it becomes really cheap. So you can mint plain NFTs on Unique, you can mint million of them, and it's going to cost you like $15 or something like that. That's that's the levels we're talking about. So
Mm-hmm.
if you need to certify AI outputs, and you need that to be 50,000 of data points per minute, you're all set. You can do that. So um, we we passed through the journey. We launched the Unique right in the hype of 2021 of NFTs and everything. And what that has allowed us is to create a technology that's really good, and to get enough funding so that we don't have to rely on new funding for a while. And that has saved us from the bear market ever since, and all of that stuff. And we managed to create the very deep expertise in certain areas and so on. We're deploying it everywhere now, on Polkadot itself and on other stuff as well. So that's why we're building this AI solutions that are using NFTs on Unique, and the
Mm-hmm.
solution is working on BitTensor. Okay, so that's going to be the first one. I hope to launch that one in April. But that's a very interesting combination, because BitTensor itself is a substrate chain as well, uh, and it has some very powerful things working for it. So the combination, it doesn't have NFTs in itself. It does have smart contracts though, but you don't need to do that there. But the combination is something that I'm really looking forward to see how far it's going to take us. Because again, we are already it's already working. Yeah, the subnet we created for BitTensor is in testnet since October, and it's
Mm-hmm.
now minting something like a few hundred NFTs per day just on a testnet. And then when it goes live and we get all the validators and miners, it's going to grow exponentially to, I don't know, tens of thousands per day, type of a thing. And it should be, it should be fairly easy, and it's not the scale that will do anything to the chain, or will show up anyway to as
And
a
how,
problem.
how will that work, Alex? So your subnet on BitTensor is going to issue NFTs for other subnets which may be working on some specific AI task, or how will that work?
No, no, no. They are so NFTs. Well, we are experimenting still. We're working on it, because ultimately, what I want to use what I want to do with that is create the kind of, at least a monitoring system within the ecosystem, for workings of how well the validators work and how well do they kind of evaluate the work of miners, and how to identify ways to improve the overall solution. I don't know how much you know about BitTensor. It's very complicated. But the idea there is that miners do stuff. In our case, they
Mm.
do different implementations of auditing Solidity code, and they compete between each other for who does it better. And you
Mm-hmm.
can have dozens or hundreds of those. Most of subnets have like 256 miners or IDs. They have 240 miners. Some of them are kind of multiples of the same player. Some are kind of original, but still you have a few competing in most subnets. And then you have validators who are just staking their tau, their token, and then they are supposed to check the miners and give them rewards based on how well they're performing. But that incentivization mechanism is very hard to do on the protocol level. You have to have some additional kind of ways to incentivize to make sure that there is no cheating, there's no kind of personal interest, and that the interests are aligned with the overall improvements. And overall, there are particularly the problems there are that you can have the validators if they make less money if they do something different than the rest of the validators, and that
Mm-hmm.
is a problem when you want improvement. So that's what we're trying to figure out the way how to create. First we are creating data collection system, then we're going to kind of create on top of that the kind of dashboard monitoring system to understand what's happening better, and then we're going to try to figure out how to actually motivate everybody to go on board, what's needed
Mm-hmm.
for that. It's very very complex, but the
Mm.
idea there is that NFTs become data collection points that are indisputable. Okay, and then you start building solutions on top of them. It's going to work on our subnet. It doesn't relate to others. We may kind of come up with something that's useful enough so that others want to use it as well. We'll see. I'm not that ambitious. I'm trying to solve problems one at a time, and so the problem we're trying to solve is hard enough in itself. We'll talk
Mm-hmm.
about other subnets in the future, maybe.
Right. Right. Okay. No, I mean, it's been a while since I took a look at BitTensor, and we were looking at one of sort of decentralizing one of our AI models, which was working on DeFi data. And BitTensor, at that point of time, when I had taken a look at it, and the miners were essentially they were fixed solving AI tasks, and a data scientist could do that. And depending upon, and the validators were in some sense checking on the results of the outputs and sort of assigning whatever the metrics were, be it precision recall or whatever metrics were there for determining the efficacy of the miner's works in terms of that particular
Yeah,
AI
they're
task.
still there. Yeah.
Right. So, and here you spoke about sort of auditing Solidity code and sort of again rewarding them, evaluating them accordingly. And so what would and maybe this is a sort of very quickly, just from understanding perspective and for everyone to understand, what's your vision of how this could all pan out for NFTs or a unique network and a decentralized AI infrastructure like BitTensor when they come together? Is it going to be around one subnet, or is it going to be have an ecosystem wide play?
Oh, I want to make a lot of subnets actually, because subnets are doing one thing. Okay, you cannot have one subnet that's auditing Solidity code do kind of NFT pricing, market pricing. You have to have two. So I assume it will be. I do have hopes and plans to create multiple subnets, but I want to succeed with with one first. You
Mm-hmm.
cannot you cannot parallelize those things. You can, but you'll fail. All you're doing is increasing failure rates. But we do have the thing is, we know NFTs well. We know them better than most people. We know what they can do technologically for other solutions. Okay. And we know more than most people do and can help people brainstorm that. And what I'm hoping to do is to apply that expertise
Mm-hmm.
to solutions that come around and kind of need that. We do have ideas on several that we might want to do, but that's not the only way to go forward. I think that I'm more interested in scaling this problem solving capability than I am in creating my own empires. So again, as I said, we're using NFTs in this particular first use case to certify the output, and I hope that we make it valuable enough so that other subnets want to use it. Um,
Mm-hmm.
we'll see. I don't know if we're going to get far enough because, again, the incentive mechanisms in BitTensor are very complex, and finding the right solution it's not easy at all, and probably it requires a few, some trials and errors and so on, and then we'll see. But I have another one that I'm really passionate about for 6 years now. Okay, so I first heard about NFTs back in 2017, like most people in blockchain space, and then I've been talking to a guy, a Swedish guy, about different kind of things that can be done with NFTs. And back then, 2018, uh, we said, well, you don't have market pricing for NFTs. So
Mm-hmm.
if you want to do trading, nobody knows. That's the marketplaces, exchanges. Their main function is bringing enough buyers and sellers so that you can determine the market price for the product. But if you have if you're selling, millions of different individual products, you don't have marketplaces doing that. You can, it's just not possible for an exchange, like without kind of any additional tooling, to give you the market price of each and every CryptoPunk. Okay,
Mm-hmm.
how they're valued and so on. It's still kind of individual process, evaluated by buyer and seller individually. So back then we created this in 2019. The AI, it was machine learning tool. I think it was TensorFlow at the time we used to create to determine the market pricing for each NFT. We did it for CryptoKitties. So
Mm-hmm.
you train it specifically for specific data, with specific data, and it gives you the market price for each NFT. It worked even then. It was having 30-40% margin of error for individual NFTs, but it was really good at like top 100 NFTs. So, if you want to come in and buy, bulk and invest in something, that is a very valuable product. We back tested it even back then, and it worked like a charm. It was giving a lot better returns than doing it individually or doing it any other way. So, that's another use case that I really like. But these are only things that we can come up with from the top
Mm-hmm.
of our head. I'm pretty sure there's lots of them out there where NFTs can play a role in the AI space, and we are constantly on the lookout for those and kind of trying to figure out how to work together.
Mm-hmm. Fascinating. Enjoyed this conversation, Alex. And sort of normally in this conversation with another founder, I toast to one of the sort of achievements in the founder's life. But I think here with NFTs, which might seem a little out of flavor in some sense, but they're such a deep technology. There's so much to be done, and it's all in the future. And to that future of NFTs, I toast to you.
Thank you. That's what I'm
To
working
the
on. I
future.
think I'll be working on it for another 3 years,
All right. Awesome having you on the chat, Alex.
Likewise, pleasure talking to you.